On my channel, I talk a lot about the S&P 500, the 500 largest companies in the US. That's something I invest in myself because I generally think it's a rather safe investment long term. However, obviously that is very much US based because these are the 500 biggest companies in the US. And a lot of people have been asking me, Kai, what about other countries? Are there equivalents to the S&P 500? And in fact, they actually are. So essentially every major country does have their own version of the S&P 500. It might be a little bit less companies, but kind of the biggest, most successful companies in one index that you can also buy ETFs based on. So I thought in this video it might be interesting to have a look at some of those and see obviously what are the companies included in it, and of course more importantly, how do those compare to the S&P 500. With this, let's get started. Right, and here you can actually see the list of world major market indices. So all of those, for example, the S&P 500 over here, these are indices, right? We have the Dow Jones also, another popular index that people invest in. We have the NASDAQ index. So a couple of different ones that you can see over here. Then we have, for example, Canadian one as well, the S&P TSX. Then also in Brazil, we have the one Bovespa, however it's pronounced. Then of course, being a German, we have also the DAX. So these are the 40 biggest companies in Germany. So I'll look at this in a second. The FTSE 100 from the UK, the CAC 40, if I pronounce it correctly, from France. So you can see most of the major countries, they do have their own sort of version of the S&P 500. Again, in many cases, it's much less than 500 companies. You see 135, as I said, in Germany is 40, in France is 40. You have the European version as well, the 50 biggest stocks in Europe. In Japan, we have 225. So different countries have different number of stocks on that. But I think let's have a look at some of those and see how they compare to the S&P. Let's start off having a look at the German stock market. And you see here basically the 40 biggest companies in that, and this essentially consists of 40 companies. They do have a couple of other indices in Germany as well, like basically a tech version of that index, but here it's basically the biggest 40 by market capitalization. We always talk about market capitalization, which is basically the price of the share times the number of shares. Those two numbers together, and you'll be arriving at the market capitalization. So here you see the most valuable company right now based on market capitalization in Germany is SAP, right? So it's a kind of software company over there. Then we have Siemens. A lot of people know Siemens. They really operate in so many different fields. We have then on number 3, Deutsche Telekom, which is essentially a phone internet data provider. Then we have Airbus over there, which of course is a joint venture between Germany and France. We have Allianz, a big insurance company, a car company. So really quite interesting. Another car company, Porsche over there, another insurance company. At 11, another company. At 12, another car company. So when we look at some of the biggest companies over here, not that tech heavy, right? Well, SAP and Siemens, you could argue they are, but the rest, I wouldn't particularly say they're super highly innovative companies. And also when we look at the market cap, I mean, the biggest one being 231 billion. Sounds a lot of money, right? Just to give you a quick comparison, when we look at the most valuable in the US, that's currently Microsoft, Apple, or Nvidia, depends on the day. There's not much between the three of them, but essentially we're talking about more than 10 times the value here. It's 3.3 trillion. So it's absolutely unbelievable. So yeah, really huge difference. And of course, most of those companies are very much, tech driven, right? AI, internet, data, all these things. While when we look at the German ones, these are more legacy companies that have had a long history. Great companies, right? But I'm not sure they're that future-proof like maybe some of the ones we see over in the US. So let's have a look how they compare in terms of numbers. Right, and here we are inside TradingView, and you can already see year-to-date performance. That's only since the beginning of this year. The difference is already quite strong, right? The DAX, the 40 companies I just shown you before from Germany, returned 8% plus, while the S&P returned 15.5. So already quite a difference in just a matter of months. If I now go to a 5-year period, you see an even bigger difference over there. While the DAX returned 46%, the S&P pretty much doubled that. That's honestly a major difference from an investing point of view, and just makes me realize I really wouldn't want to be investing into the German stock market. If that was my money all invested into the DAX, not in the S&P 500, I would have returned half the amount than I would have as I did investing into the S&P. The longer I go back, you see that difference getting more and more pronounced, even though you see there have been little periods along the way where the DAX, the orange line over here, slightly outperformed. But then, most recently, because of course the tech stocks really started taking off and the S&P becoming more and more tech focused because they're doing so well, you see now in recent times, the DAX, the German performance has really been dropping off, and I don't think they're going to be turning this around anytime soon. Right, with this, let's have a look at the 40 biggest companies in France, right? The CAC 40. Here we actually have the second most valuable in Europe, which is LVMH, the global luxury powerhouse. And I mean, they used to be the most valuable, but then they fell behind Novo Nordisk from Denmark. But yeah, basically with 388 billion, actually you can see much bigger than the biggest German company, but in comparison to the US ones, still around a tenth smaller. Then we have L'Oreal, Hermes, energy company, Sanofi, Airbus, of course, once again, the joint venture over there, AXA, which is another insurance company, BNP Paribas, which is a bank. So once again, to be honest, quite traditional companies, right? So really no major AI or IT companies standing out here. I mean, all great companies, don't get me wrong. LVMH, I think, is a fantastic company. What they've done is incredible. But yeah, and I look at those companies over here, IT-wise, really nothing too impressive, once again, at least in the top 10 that I can recognize from here. So let's see how they did versus the S&P 500. Well, in similar story, as you can see over here, year to date, since the beginning of the year, the French index remained pretty much flat at 1% growth, very, very little, while the S&P, grew by 15.5% as we saw before. Let's go to the 5-year period over here, and you see even performed worse than the DAX actually. I believe that was around 40 something. The CAC 40 only returned 37%, while the S&P more than twice that. So really very poor performance actually. If I zone out even further, that difference becomes even more pronounced. So I'm really glad I didn't invest into the French market while I was holding LVMH shares for a while individually. As an index or overall stock market, it once again just cannot seem to keep up with the S&P. Let's get a little bit more exotic and have a look at the Nikkei 225, which is basically the S&P 500 equivalent in Japan. So let's have a look at that and see how they did actually. So here you have all the biggest companies over there. Of course, how else gonna be Toyota at the very top. But even Toyota, once again, the market cap is lower than that of LVMH, the global powerhouse in luxury. I mean, they're making leather goods and handbags and of course other things as well, but still Toyota, such a global iconic brand, is valued less than that. So it also shows how much money flows into certain markets, right? In my eyes, it doesn't mean that this company is less valuable than LVMH, for example, but obviously because less people invest in it, the price overall stays lower and therefore the valuation is less. So technically, if you compare the two, then yes, it is less valuable because ultimately we have to benchmark itself based on market capitalization, not what people think. So yeah, that's really interesting. And obviously, generally, I believe US continues to remain the strongest market, but still, let's have a look at some of the other companies over here. Of course, Mitsubishi, Keyence, I don't know that company, Hitachi, Sony, Tokyo, SoftBank, which is a big, bank that invests in a lot of, startups and so forth. So I don't know, all those companies, obviously some of the ones like Mitsubishi and Hitachi and Sony we are familiar with. But yeah, some other ones, Nintendo, of course, we know as well. What else? We have Honda. So here I could imagine it's a bit more tech heavy, while still, of course, companies like Toyota and so on, they are obviously more traditional companies. But then we have Sony, we have SoftBank. So I can't really evaluate what all those companies do because a lot of them are real conglomerates, right? They do so many more things than just, one specific sector. So it's hard for me to gauge, how tech savvy they are, but given that it's Japan, they are very much, living in the future and very tech forward, I would say. So yeah, that's a good sign. Let's see how they compared to the S&P. Very interesting enough, year to date, the Nikkei is actually up versus the S&P. So here's the first time we see that some index outperformed the S&P. So really not bad. I mean, 4% more than the S&P return. Let's have a look at the 5-year period. And here it's neck to neck. Still slight edge to the S&P, but actually, to be honest, quite impressed how well the Nikkei did. Obviously, they really performed very strongly over those 5 years. So while the total valuation of each of the companies is much less than the US, the performance and uptick in performance seems to have really kept up with the S&P. And lastly, let's have a look at the country that actually outperformed. I was really surprised to see those numbers, and that is India, the Nifty 50 it's called. And to be very frank, I honestly am not familiar with most of those. A couple of them I heard before, like Infosys, of course, is a very big IT provider of different software and so forth. Then we have Hindustan Unilever. I know Unilever, some kind of partnership with them over there. The biggest ones, again, I'm not really too familiar with. Tata, I suppose I heard Tata before. They also make cars and many other things. So again, once again, I think a lot of those companies are really conglomerate companies that do many, many different things. Adani Enterprises, we heard recently in the news a lot. Tata Motors is a separate entity even. So, okay, interesting. So yeah, again, I'm not familiar with all of them. The biggest one you can see, valued 248 billion. Once again, less than, for example, the likes of LVMH. But when we look at the total performance of those, you'll be very surprised. So while year to date, you can see the Nifty 50, the Indian stocks, are slightly trailing the S&P, 10% versus 15% return. However, if I go back to the 5-year view, you will actually see over 5 years, it quite outperformed the S&P 500, 86 versus 103% for the Nifty. I was really surprised. You can see that most of the gain came in the last few years. The companies did really well, as previously they underperformed a bit. If I zone out even further, that difference comes even bigger. Look at that. I mean, that's now since, when is this? 2014, so around 10-year period. S&P returning, 200%. What is this over here? Around 200%, while the Nifty 50 returned almost 300 at 289%. I mean, really quite surprising, to be honest, given the fact that I hardly know any of those companies. Those people investing into the Indian stock market, I'm sure they did very well. In fact, I actually know a lot of Indians either buy gold or they put all their savings into the stock market, because that seems to be the only way for them to really grow their wealth. As real estate becomes ever more expensive in the country, the hope is by investing into some good stocks or potentially the index of India, that they really will benefit from that. And honestly, with such returns, I totally understand the fact that they actually do this. Now, obviously, I could have done this for many more countries. I'm sure there will be some other surprises, especially for some of the more emerging countries that only recently started really building up their local domestic stock market. They probably in percentage terms will see more growth than you would see, for example, in most established places in the West or in the US in particular. So that's normal, right? At the same time, while it's nice to see some countries outperforming the US, long term for me, I still feel most comfortable investing in there, because I know I'm going to get superior returns, while there might be some countries that are potentially outperforming it. Long term, I know I'm also going to be in safe hands. It has a long history and I know my money is safe investing into that. While you have maybe some other countries that are emerging and doing very well right now, what happens if the regulation changes or the economy changes? So many question marks that potentially might also risk my money, right? Otherwise, I could also remove all my money from the S&P and put it into the crypto markets. I could potentially have way higher returns, but ultimately I might also have way more losses, right? So that's why I think the S&P for me is a nice balance between risk versus reward. And yeah, I feel very comfortable with this. Of course, investing into it, you can't directly invest into any of the indices. You have to go through an ETF, exchange traded fund. You invest into this fund through your brokerage of choice, and then that fund manager basically manages your fund to mimic those indices, whichever you choose. So any of the ones I've shown you, there are ETFs on there. There are also global world ETFs that you can invest in to basically include all those various countries, and that way you're most diversified. So the choice is yours. Ultimately, it's your money, your decisions. I will continue investing into S&P 500. I feel very comfortable with that. But as I said, I do understand when people also want to venture out into different markets to kind of play around and get potentially high returns. And I'm also excited to hear from you. Let me know down in the comments below, what is your favorite market or index to invest in. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.